The Hedgeless Horseman here. It's December the 27th, 2022. I hope you all had a good Christmas and are a bit rejuvenated, ready for the what will soon be a new year. Uh, anyway, I thought I'd start off with just some thoughts. Given that it's soon 2023, it's quite typical to have New Year's resolutions, etc., and kind of reflect on uh, the year that just uh, passed by, and I'm not sure if this fits into that New Year's resolution category, but I thought I would just basically spitball some ideas or thoughts, I guess, which I've been thinking about recently. First off, a bad habit I have had is that when you are your own boss, it's obviously a bit harder to get up uh, when the alarm bell rings or the phone rings, because you don't have anyone that might fire you if you're late to work because you are your own boss. But anyway, it's like I've been quite annoyed by myself for sometimes, let's say, snoozing for up to 30 minutes, and looking at the phone, scrolling, maybe Twitter, checking emails, messages, etc. It's like, if you do that kind of worthless habit 15, 30 minutes per day, on average, that's a lot of lost time. So I just had an idea. It's like I'm probably gonna buy an alarm clock and actually put the phone in a different room, so I don't have anything to occupy me. Procrastination, uh, and snoozing. Uh, I think that makes sense, but I like stuff like this. I wouldn't call it maybe life hacks, but in this case, an alarm clock would actually be kind of a investment, because okay, if I can cut out 15 minutes on average at least per day of just basically procrastinating, that amounts to a lot of time over the long term, and I hate being inefficient. That's why the worst thing, in my opinion, with having a cold or something is that I just feel like I don't have the energy to do any work, and that drives me crazy because I hate a day passing without feeling that I've become better at something, actually done something productive. Also, it's like limiting social media. I think I just spend too much time on Twitter, for example. Most of it is just, it's a dopamine kick, really. You can sit there and update, every minute or whatever, or every 3 seconds, just, trying to get something new to react to. All the while, it's like, I don't think I've ever changed. The amount of, there's a lot of interesting stuff on Twitter. Some threads or users, and not necessarily having to do anything with investing, but there's a lot of good content if you know where to look. But in the meantime, 98% of stuff is like, it might be a bit interesting. Like, okay, somebody shows, like I can do myself. Like, oh, okay, price of silver is up or whatever, price or whatever is up. Or look at this stock run or that stock run, or look at inflation expectations. This is what the Fed said. Yeah, it's typically, I don't use any of that. I almost use none of the content on Twitter in my actual investing decisions, because let's face it. Everything is pretty much noise, and the more people talk about something, the more of that is already priced in anyway. And I don't think that's how you get an edge, like I've said a bunch of times. Since everybody seems to be trying to predict when Fed is going to pivot, etc. How do you get an edge there? There's like 100 million people just thinking about when Fed is gonna pivot. Uh, and it's like, okay, how do you get an edge there if you're better than the consensus, the market, with like 100 million people thinking about it, and analysts and insiders and whatever. Now I don't think that's an edge at all. So that's just, again, it's like total noise in my opinion, and it's easy to again get stuck on Twitter, for a lot longer than is actually meaningful at all. Since again, it's like if you're not using much of this stuff on Twitter, what actual applicable value does it have? It doesn't. It's just a way to procrastinate, like to have something new to react to, so you don't actually have to do something that requires some original thought, etc. Yeah. Anyway, it's like I'm gonna try to uh, draw down on my Twitter time, let's say. Um, but I'm not gonna stop posting or reading. But it's like, yeah, try not to actually just get stuck there. It's like for an hour straight, just reacting to things or reading noise. Another thing is like I recently watched a clip on YouTube which talked about millennials as a group. Some, let's say, characteristics that are typical of millennials in the working place. And overall, I mean, I don't think instant gratification is a problem just for millennials. I think that's a societal problem right now. I mean, I think we're pretty much at peak instant gratification. It makes perfect sense why we would see the world's biggest bubble, crypto bubble, and the biggest debt bubble. You take on debt because you want to have something now instead of saving for it, and it's of course cheap. So I mean that makes sense from that perspective as well. But also, the Bitcoin and all these thousands of cryptos. It's like, yeah, I don't want to do any due diligence or anything like that. Everybody says it's going to go to the moon, and so far it has been going up. Well, not lately, but like every rip or every rally, basically. It's like, yeah, don't need to think much else other than it's going up. Due diligence, the fact that pretty much every crypto is basically worthless, I would say, over the long term. It's like, yeah, who cares? I mean, investing and actually, picking good companies, not even necessarily the most volatile, like in the mining space, which actually can go up like 500% in 2 years, etc. Just saving in an ETF or index fund or whatever. It's like, oh, average 10% per year. Oh, that's so boring. These Doge coins can go up 1000% in a month. So I really do think that, given I think we're at like peak instant gratification in Western society, at least overall, I think it makes more sense than ever to have, again, a longer term perspective, because as the time frame of people shortens, it's gonna discount the future even harder, and that's what I've been saying. I think is absolutely the best edge. It's like buying something today for catalysts that the market doesn't even care about yet, but might happen in 6 to 12 months, and when those catalysts happen, then market will start to care about it. When let's say you have a catalyst expected in 6 months, or good news or whatever, it's like in 5 months the market will start caring about it, because then there's something that you could, quote, get rich tomorrow, etc. So I think that makes, again, perfect sense, more than ever actually, to just have a longer term perspective, because everybody on Twitter and forums, etc. I mean, we're all pretty much trying to guess where a stock is going to go tomorrow. Doesn't make much sense, but then again, well, since everybody's talking about it, everybody thinks that's what you're supposed to be predicting, and despite that, almost nobody makes any money. I think there's some lesson in there. And on investing, like looking at a ticker is not working on investing. Thinking, reading, and learning about investing and cases is working on investing. This is work on investing. I'm reading Geology for Dummies. I watch a lot of Warren Buffett videos. I read books by Howard Marks, books by Peter Lynch, theory crafting cases. Again, it's like what both Stan Druckenmiller and our boy Eric Sprott talks about. It's like see the future early. I know, for example, Stanley Druckenmiller says, envision what the world might look like in 12 to 18 months. That's where the edge is. And then obviously compare it to where we are trading today. Or what people's expectations are of today, for example. And I think that's, that's not limited to, he's mostly, I guess, a macro guy, but it's like, obviously works for stock picking as well. Okay, what are people saying and thinking about a company? And then you try to envision what will have happened and what are people gonna say and feel about a company in 12 to 18 months. And then you look at the current market cap and you're like, hey, I think people will be speaking even more positively about this company, or that X, Y, and Z might have happened, and all of a sudden people won't be talking about 1 million ounces for this company, maybe 2 million ounces, etc. And there's, in my opinion, a big, patience arbitrage there. And on the, what is work or being productive, etc. I remember, I think it was a few weeks ago, maybe, it's like had a very, very good day in the portfolio. It's like, in absolute terms, maybe one of the top 3 largest gains for a single day. Again, in absolute terms. But I didn't get much work done because I kind of was stuck to the, watching the tickers of some big positions, etc. And typically one might think that, hey, you're up a lot on paper today. On paper, you made a lot of money today. Maybe, more money than most people will make in a year from, working their salary. But I wasn't too happy with that day because I got so fixated at just watching something go up. Because it was a volatile market. I think gold and silver was up a lot. Everybody was cheering, etc. I was like, honestly, a day of gains, for example. The whole reason why if we find a good company or a good case, hopefully the reward is a matter of when and not if. So one could say, it was just a matter of time. And on the other hand, as soon as something revalues, especially if there's no news out, for example, if it revalues a lot, yes, you can share the fact that on paper you're up more, but that means that the future is a little less bright for that particular company because price has gone up. So you recede some of the gains the case was all about already. So there's less gains in store for the future. So I from one sense, like, yes, right now it feels good, but also that means that the future is getting a bit more negative, even though it might be quite positive overall. But it's like, if you have a base case of 200% in a company over 2 years and it goes up 50% in a day with nothing having changed, for example, you can share the 50% return, of course. But the future case is not as good because there's only 150% expected return left. So it's always a good and bad thing, and that's what I keep saying about if no news is out and the stock goes down, or if news is out, it's let's say bad, and the stock goes down a lot. Yes, you have some immediate pain, price pain, but maybe thanks to this volatility, that stock actually declined too much. I mean, especially if there's no news, for example. Maybe a expected future return of 150 turns to 200, whatever. So all of a sudden, yes, it sucks in the now on paper, but all of a sudden, hey, if the future is all of a sudden very bright, or even brighter for this company because price went down, then you could obviously invest more. So, is it a blessing or a curse? That's the hard part. It's kind of the same for, if a stock goes up a lot on no news, that means that the future is getting a bit less bright. So you might cheer again for the uptick, but at the same time, the future is getting a bit worse. So again, was it a good or a bad thing that the price actually went up? Because if it went up, you can't buy anymore at the lower prices. So the opportunity has decreased. Should you be cheering that? Who knows? I mean, it's the whole point of everybody wanting every stock to go up all the time. It's like, then it's almost like you don't know what an opportunity is. Because you're saying, I would wish that all my stocks, all my favorite cases go up at the same time. So I might have any opportunity left where I could put in more money or reshuffle from something else. I mean, it would be the worst thing ever for every no-brainer case to go up 100, 200% and not be a no-brainer, and you can't find any more no-brainers. So yes, you have a big paper profit now, but all of a sudden your expected future returns over the next 2 years might be 0%, whatever. So if you get any new money, there's there's no opportunity out there because everything repriced to fair value already, or maybe beyond that. So there's always a flip side to every price change. And that's, I think, why I don't care. I don't celebrate much when something goes up in price, especially if nothing positive has happened. If there's, let's say a discovery, or some holes were better than one thought, or the system got even better and price went up, but not as much as the actual value of the case improved, then I would be sharing that because, okay, this is an even bigger opportunity now after it's up 30% or whatever. So not only did I get a positive surprise, I got a 30% re-rate higher, but also the future got even brighter despite price going up 30% because this new news is worth more than 30%. So that's a really good day, actually. And in my opinion, it's like a bad day, portfolio up a little to no work done. Yeah, I got these mixed up. When I've done some, because again, it's like if you have an expected return of your portfolio, all cases included, 200% within 2 years. The work is already done. You have done the due diligence, you have theory crafted, etc. Then it's just a matter of when something goes up, and you have 200% expected return. That is a base case for what you will receive over this 2-year period. And again, if the portfolio goes up, you didn't do any work. It just means that you got some reward quickly, but again, the future expected returns go down a bit because you just got rewarded already. But that's not like being productive or whatever, because if you get something now, you will get less later. A bad day actually is when the portfolio is up, or for me personally, when a portfolio is up, but I got little to no work done. Because if nothing has changed and price just goes up, that means, okay, I got paid, but I was, let's say, always gonna get paid, and that wasn't a productive day. Just because the case is, let's say, playing out or price is going up, again, that means that there's less in store in terms of future expected rewards. So you really didn't gain anything except on paper. But it's like, yes, okay, if you get 30 and you expect 200% over long term, you got 30 now, but there's only 170% less. So But that's the thing with, if I find a really good case, I'm really excited about, figuring a case out. But when you actually get paid for a case, I mean, the thing I hate is when you have a really solid case that will, let's say, I wouldn't say hate, but let's say it actually does revalue to fair value. I mean, then that opportunity is gone. So it's like, both good in a sense. Yes, you made money, but now you don't have anything to, left to gain really in that story. So that journey has kinda ended, and you actually have to find something new. But as long as it has not value to fair value, you have a constant opportunity there, which is a good thing. But obviously, that's not how most people see it. It's like, if they're up a lot on a day, or their portfolio is up 30%. It's like there's some big surprise that, oh Jesus, I actually made some money. It's like that should, if you're professional, let's say, that shouldn't be like winning the lottery ticket. Because if you actually have an idea what you're doing, you wouldn't be cheering like it was, again, some lottery ticket you won. It's like, I remember Mike Tyson's coach telling Mike Tyson, Castemaro, I think his name was. He asked him after he won some boxing match when he was very young, like, why are you cheering like that? And his point was that, I mean, you train for this every day, so why are you so surprised when you win? It's like that it wasn't very professional, let's say. Of course, I mean, you train so much, and you expect to win. It shouldn't really be a big thing. It's just another day at work, basically. So I found that very fascinating. Anyway, if anyone gets that point, let's say. Another just random thought. It's like when you think about Warren Buffett, why does he live in Omaha and don't really use a computer? Because he doesn't want to get influenced by all the noise out there, everybody's opinion. It's like in the forums and on Twitter, as it pertains to your favorite case, never forget that almost nobody makes any actual money over the long term. But almost everybody has an idea. It's like, I see people who I would be quite sure do not have good long-term results. But it's like very harsh judgments, like, yeah, this is obviously a buy, this is a sell, and slinging out, buy and sell recs on CEO, etc. That is a bunch of noise, but it affects everyone. It affects everyone. And that is, I mean, the whole point why Warren Buffett and Charlie Munger are kinda isolated. Because they know what they do and how they think work. But they also know that it's impossible not to get influenced by people who don't have their returns, but have opinions. It's like in the forums, if everybody's talking about a tree, something, it's almost impossible not to start thinking about that tree yourself. That's obviously why, bashers only focus on the negative, and we longs, or, especially if we're a bit pumpy, we focus on the positives. Because we have our biases, and sometimes we have actually, let's say, intent for selfish reasons. So I would think actually that, and that also pertains to like limiting social media. There's so much noise out there, and you could almost disregard anyone's opinion. Not, I mean, there's a bunch of people that have way better grasp at geology and mining, etc., than myself and other people. But knowing the geology or knowing the technical details of a tree doesn't necessarily mean you have a good grasp of what the case is. Because some people, in my opinion, look, let's say you're a geo or a mining engineer, you look at one thing, it's like what you know. If you're a mining engineer, you know mining engineering. If you're a geo, you know more about geology. It's like you see a red flag, or something looks great to you. But as an investor, you have to factor in, what am I paying for it? What's the actual opportunity? Because obviously there's stuff that looks great but can still be valued at a at a price that it's actually not a great case, even though it's a great project. Or a project that has some, let's say, orange flags or maybe a red flag, but it's like, yeah, but it's priced so cheap that it's actually a good bet here. Because if there's like a 20% chance that this red flag will not materialize or whatever, then it's really cheap just based on mathematics. So it's a big difference. It's our job to factor in everything and look at and factor in price, which is the most important thing, and that we all can know. And then try to estimate, is this actually a good or bad case? Another point I recently read, well, I haven't read the whole book, but Market Wizards, I think that's what it was called. A lot of, you know, millionaires and billionaires which are being interviewed in that book, and they talk about mostly trading, etc. So there's a bunch of stuff. I've heard, you know, everybody on or a lot of people on Twitter recommended that book. So I've read about half of it. It's like, yeah, there's a bunch of interesting stuff in there, but most of it is about trading. So that kind of, you know, I'm not sure if again, it's like, am I doing myself a favor or disfavor or disservice reading that book? Because a lot of ideas get thrown my way, which has nothing to do with long-term value investing. It's like how you should, if this happens to price, then you should look after that and never forget to have a stop loss. I mean, I've never used stop losses. Because it's like in a volatile sector, you know, why would I want to be dumping at the market in some illiquid junior or whatever? So I guess the point there is that know what your strategy is. And there's a bunch of people that have made a lot of money on, you know, in some way by trading or shorting or whatever. But if that's not your investing style, I don't think you should pay too much attention to what they have to say, because that's also going to influence you. I mean, there's obviously sometimes some good tips, or, you know, yeah, I haven't thought about that, or maybe you learn something about how a stock moves in certain, or what it suggests. Yes, there's some factors you might be able to implement into your own style, but it's always very hard. It's like, if you have one way of going about it, then you pick up a new, let's say, tool or trait or technical thing, and that's like, yeah, but that doesn't really match your overall investing strategy. So it might be a good idea, but only if you're actually a strict trader, for example, to implement, let's say, a stop loss or whatever. As a value investor, I mean, nobody would be catching falling knives like if you're actually a trader, because that's the trend is against you at that point in time. So yeah, I hope, you know, some of that makes sense. And just other stuff like exercise and strength training makes you smarter and think clearer. It actually helps with investing. So I try to, you know, I work out. It depends on what kind of workout schedule I have, but it's like 3 to 5 times a week. I try to, you know, go to the gym. And it's like, first of all, I know I get something productive done at the gym. I don't watch tickers at the gym. So I'm quite happy if I have let's say a portfolio is down, and again in price, meaning that, okay, if it's down in price today, I have some price pain today, that means there's an even brighter future ahead. So I haven't lost anything, except on paper for a day. But if this portfolio has a base case of going up 200%, it just means if it goes down, maybe it will go up 213% from the new low. So you never really, again, lost anything. It's just, you lost something on paper today, but the future got brighter because price got even cheaper. So it's net, there's like no real change, except, yes, you have to, you know, obviously it'll take a day more and more up action to actually get to your price target or whatever. But it's like, in reality, if you're not selling that, if the case hasn't played out, nothing has really changed, or you don't need the money. But if you get a workout done that day, okay, you made your body just a little bit better. So actually, you built something. Because one day that portfolio and those stocks are gonna go up, and they'll go to the, theorized base case you have, and you'll be in better shape. But if the portfolio went up, nothing else changed really. So it means yes, you got some paper profits today, and there's less tomorrow. But you didn't actually do any. You didn't go to the gym or read a book or do anything productive. You didn't really gain or lose anything you didn't have the previous day, because you were always going to get the gains. It was just a matter of the returns. It was just a matter of when, not if. And you didn't work on your body or whatever. So you actually didn't do anything productive that day. You didn't come closer to whatever goal or self-improvement goal you had. You didn't become really better. You just got some paper profits today and will have less tomorrow. And as always, like, social media and forums are typically highlight reels. I mean, people talk about how much they made in a stock or whatever. There's very few that brag about their long-term portfolio returns. I know. I know a few people who I think are really great. They don't really, or at least one guy, he doesn't really post that much about his returns. And I know that there's a bunch of people who are typically the loudest, which I'm pretty sure are like, I remember this one basher in the Novo forum, and I sent him the graph of my oldest portfolio, and he was accusing me of being a, let's say, crap investor, and I showed my graph in that one. That's the more high risk, high reward, at least nowadays. Concentrated portfolio, that's not a fair estimation of my total portfolio. Was like what you could theoretically do if you are willing to take concentrated portfolio positions, etc. I wouldn't invest like that or speculate like that with my entire net worth. But it's the fun folio, I call it, kind of. Anyway, he thought it was photoshopped. So I mean, that kind of tells you, in his opinion, he has it all figured out, and he's very happy to hear, air his thoughts about everyone else being dumb or whatever. And he's like, pumping out investment advice. And then, when I show my graph, it's like, oh, that must be photoshopped. So obviously, it's like, I know I'm, better investor than him, especially over the long term. But that's also noise. I mean, nobody or very few seem to have much self-reflections. Like, do I actually have these good long-term results that I'm comfortable, telling other people what stocks to buy or sell? No, I don't think a lot of people have that self-reflection. And it's like what my goal was from the beginning is like, when I didn't have a single sponsor, etc., my goal was always, I want to be the best investor. I mean, I plowed hundreds of hours reading into mining, investing, watching all the clips I could, reading books on investing, primarily investing and not like geology, etc., because I do think that the psychology of investing and my experience from poker, thinking from a more of a numbers game or a number-based approach is actually much more valuable than being a geologist, etc., because there's so much other stuff that goes into mining investing than just geology. But that was my goal, to become a great investor or speculator. That's why I think so much about investing and make all these videos how to think about investing, because I wasn't comfortable like, okay, either or you could go the route of like, yeah, I'm gonna have banner sponsors, or I'm gonna be a newsletter writer, etc., but not really being good at. I mean, I think I there's quite a few newsletter writers out there that aren't really good investors themselves, but they're very good at, let's say, selling the idea that they are. And maybe actually they have above average cases, etc. I would think so. But there's a lot more to it. And we're going to go through just a case example of how I think one should think. We know that Snowline put out the news last week, I think it was. Stock went down. I don't know how much, but it went down. And I think it was like 22% on the day, and then it fell like 5-6 the other day or something. So what is interesting about the case of Snowline, for example, so it's like the narrative of the blue sky for Valley has, let's say, taken a hit, because the theory at first was that, okay, we have this big pink blob, which is an intrusion. If that averages 1 gram per ton, that's going to be, I don't know how many millions of ounces if it goes down to, 500 to 1 kilometers, like 40 million ounces or something. Would be one of the absolutely biggest deposits in the world, gold deposits. Could be worth a bunch of money. Okay, now, as we've seen when Quinton went through the Snowline results, I'm just going to play this.
Market cap for a deposit that we'll call it slam dunk at 10 million ounces, but could be 15 to 20 million ounces. Is that really $200 million company? I think there's some upside.
Okay, let's just take those comments on face value. If where's that? My original case for Snowline Gold was that there's a very high probability of it. Where is this? I simply think when the field season is over, the value reduced intrusion-related gold system target will have an inferred endowment of 10 million ounces. So that was like, and I go through this basically, that my base case bet is that Valley will at least be 10 million ounces. That was why I thought it was, no-brainer buy at $2 per share, and why I had been, I have owned the stock for a lot longer than that. But it's like, as new information comes out, so I thought, okay, this is one of the highest probability 10 million ounce targets in the entire space. So, but blue sky at that point in time, given the limited information we had, it's like, okay, if this is Fort Knox type, that this whole intrusion is mineralized at, let's say, somewhere along the grades that they hit in their first holes. I mean, then again, it would be absolutely one of the biggest discoveries ever, pretty much. So let's just say that original blue sky for Valley alone, because again, that's one thing. It's like only Valley was affected by the recent news release. It's the narrative of the blue sky in Valley alone that changed. Nothing changed for anything else other than Valley. But the market can only focus on one thing at any given time, so it has big price impact. Okay, but let's say that original blue sky for Valley alone was around here. I know it sounds like a lot, but where's the... Yeah, I mean, this is from my piece. I've listed some of the largest ever, big acquisitions since like 2014. Canadian Malartic, 10 million ounces reserves. It was an operating mine, $390 per ounce. So that was 3.9 billion takeover for 10 million ounces. Detour Gold acquired for 4.9 billion in 2019, 15.4 million ounces at 0.82 grams per ton. Also an operating mine, $318 per ounce. So over $300 per ounce for these massive acquisitions, 10 to 15.4 million behemoths with exploration potential, obviously, but they were operating mines, etc., etc. And it's like just listed here, for example. So I use this cube here for a blue sky example for valley, and then I added some something has to be accounted for the major Gracie target obviously, but still, and at one point we had the little valley, just theory craft, like okay, 500 diameter circle, yada yada. That proved so far they didn't hit anything here, so that might be barren, might be just a physical anomaly, I guess. That might be something, but maybe not mineralized. So it's like we can strike that. But here's like, okay, 24 million ounces at 1 gram per ton. I mean, theoretically, okay, we're talking, 4.9 billion ounces if we're putting the same. I think I use Nova Gold as value per ounce metric, or I used the Nova Gold at 4 billion, and then it reached 4 billion market cap for 20 million ounces, 50% of the 40 million ounce. What's that? Donlin Creek deposit. But it has some, remote metallurgical issues, JV, advanced but undeveloped deposit. So it's still closer to valley than these operating mines were. So that would be like $200 per ounce. I think I used that when I calculated, I think it was fully diluted, theoretical price target. And you can see like, I think we have it out here. Yeah, okay, like $32 per share. Still, that was the 24 million ounce blue sky, but maybe the original blue sky idea was that it could be even bigger than that, and who knows? I mean, this is kind of early stage. Still, my point being is that, okay, let's say the blue sky narrative has taken a hit. That is like, okay, Valley alone is probably, I mean, in total endowment, who knows, even if it's like low grade, but billions of tons. But for all intents and purposes, let's say this was like the original blue sky of blue sky scenarios. And from this price level here, maybe there's one over a 10 bagger potential. And then let's say it got downgraded a bit because we hit the lower halo, some news releases ago, and it's like, some areas have like 0.17 grams per ton, not even half a gram, even though we know Fort Knox has like a cutoff grade of 0.1, but still, it's like, okay, that's not too interesting. Let's say that doesn't add too much value, even though if they actually build a mine there, maybe at that point in time gold will be, so highly priced that even if you bulk mine 0.17 grams per ton, maybe you actually make a good buck on that. But it's like, okay, I don't think any case should have too many assumptions about a rising gold price, because obviously gold price doesn't affect a particular case only, it affects every junior. So I hate when I see that people like, yeah, but if gold goes to this, then this case works. Like, yeah, but that goes for every junior. Every junior should be based, in my opinion, on its distinctive characteristics itself. It shouldn't account for like a big Hail Mary from a metals prices rising. Unless it's a pure beta play. If you buy something like, yes, it's low grade, low margin, but one day when copper, gold, or silver hits this, it's going to be worth a lot. That actually works. But then you're actually aware that you're only playing the beta angle. I don't think you should use that because I'm mostly after alpha stories where they can create a lot of value. And anyway, back to the point. Let's say before this last news release, maybe the blue sky had shifted down to like $32 per share. I mean, I'm just spitballing here. We don't know where gold is going to trade in 2-3 years. We don't know what they will have find at any of their other targets, including Gracie, etc. Just based on what we know now about, let's say, Valley alone. But again, it's like, yes, okay, let's say blue sky scenario right now, given what we know for Valley, went from here to here. And a lot of people, it's like you can read that in the forums, like, okay, yeah, this story is over, price is falling, this story is over, yada yada. We're not talking 30 million ounces anymore. But it's like, that's not the focus. I mean, the case is not, in my opinion, either it's 30 million ounces or it's worthless. No, the case, as any case, is what am I paying for something today and what is it, possibly going to be worth? How much will they possibly or even probably find? So let's say Blue Sky decreased from here to here. And back on just December 12th, 12, December 12th, just like, 2 weeks ago, price was up here. And let's say the Blue Sky base case was here. So that's like, okay, 709 risk adjusted expected return. Sure, okay. Now, new information, there seems to be more, let's say, zonation of the high grade. That's like, yeah, it's more of a shell that might be very high grade. And this might be, several millions of ounces at very high grades for a system like this. And even here you have like 122 meters or 1.33. So just this stuff here, and I think he adds on a theoretical pit slope, for example. I mean, if this would be like, who knows, 5 million ounces of 5 million ounces of like 2 grams per ton stuff, might be incredibly valuable, and not accounting for remote location, etc. Just from an operational standpoint, might be one of the biggest cash flowing mines around, theoretically. So again, let's say Blue Sky decreased from here to here, and people like throw up their hands like, oh Jesus, the case is over, but it's not 30 million ounces at Valley alone anymore. So throw in the towel, no price is too low to sell, etc. But as an investor, again, we have to think, okay, what has happened to the case? Is it like, if that's like 10 million ounce plus, a probable shot of that, let's say, even if we add, I wouldn't say even, but let's say $200 per ounce, that's like $2 billion. I don't know what actual exactly share price would be. I guess it would be maybe around $20. This was just an example. But still, okay, pre this news release, maybe Blue Sky was around here, or risk-adjusted Blue Sky, however you want to call it. And from this point, there was like a 713% opportunity here. Now, Blue Sky decreased. Let's say we cut 33% of Blue Sky. Maybe that should be more, or it shouldn't be, or even higher. Who knows? Again, depends on, because we don't have the answer. We don't know what the future actually holds. We don't know if this is going to get bought, and when it possibly gets bought, we don't know what the multiple per ounce is going to be. We don't know what's going to happen with all their other targets either way. So it's like a big guessing game anyway. But it's like, okay, now it's at 365 million Canadian. That is after, because the price change has already happened, right? So I mean, we're in this reality now. We only know what the price is right now. But if we just use this example, and let's pretend that Blue Sky, or the base case Blue Sky went from here to here, and at this new price, it actually has a risk adjusted expected potential of 646%. That's actually not far off from, let's say, previous Blue Sky scenario, but at a higher price. But if you look in the forums, etc., you will see a drastically different sentiment here than here. Even though theoretically the risk adjusted, or the risk reward, might be almost as good as just 2 weeks ago at a higher price. If price didn't change, a drastic reduction in the risk reward, let's say. But price changed. That's the only thing we can judge or know at any given point. So the question becomes, okay, is 365 million for what Quinton believes will easily at least be a 10 million ounce deposit, probably 1 to 2 grams per ton? Is that cheap or expensive? Let's say, what is Snowline gonna look like in 12 to 24 months? I think they pretty much have all the money they need for the next season. So let's say they have 3 drill rigs and we have another whole field season. They'll drill up more. They're gonna probably be testing in this direction and probably a depth, which Quinton talks about. This might, the high grade might go down a long way. Maybe you could bulk mine this at the, after the end of an open pit. If they test that, we'll know more about that. So there's a chance that that might hit. And again, there's a chance that this might continue this way. And of course, we have all the other targets. Maybe they drill a Jupiter. Maybe, we know McMillan Pass got Lundin's interested. And we know that Ursa, which was the original highlighted project, in Quinton's opinion, that's still untouched, and I would think that goes up in value with the Lundin's investing in this base metal play here, which is Fireweed Metals. And we know we have the Golden Olai a lot closer to the road. I think there's going to be a lot of work this coming field season, and I expect there to be a lot of drilling. I expect there to be more long, high-grade intercepts like they've already had this year. Again, with some, they have to, if they're going to do an inferred resource, let's say, they have to do some infill drilling. And there's, I think Quinton talks about, there's a bunch of stuff. Let's, fill out this gap here, whatever. Again, maybe drill down here and it continue. So there's a bunch of scenarios. So the question is because I have a goal of 50% per year. Okay. 50% per year in appreciation. It might look like something, down 50% and up 200%. It all depends. Nothing goes straight in a straight line anyway. But it's okay, 1 or 2 years from now, let's say 12 to 24 months from now, do you think Snowline will be worth more than 365 million Canadian? If we just again take Quinton's comments after the this being a zoned intrusion, which there's a higher grade carapace and maybe a more depleted porphyry in the center set. But let's say this ends up becoming a 10 million ounce deposit after the next field season. Let's say, now it's anybody can see this is at least 10 million ounces at probably very good grades for a deposit type like this. Will that fetch a 365 million market cap or more? And then we have to account for the fact that they might hit at Gracie and drill more at Jupiter, etc., etc. If I had to guess, I would say that I think Snowline, if they find 10 million ounces or prove up 10 million ounces, I think this will look cheap. I think they have a lot of value in their whole land package. I think they might, after next season, might have a discovery at Gracie, for example. So accounting for everything, including what value alone might look like, I would say that I think there's a higher probability that Snowline will be up quite a bit than down quite a bit from this price here. That is all. So again, even I guess my original point with this case study was to show basically that yes, some look at only blue sky, and if that goes down, that's like immediately, there's a sell, because now, the case is over because blue sky didn't materialize, or there's a less lower chance of blue sky materializing. While in reality, it's like, yeah, okay, but price has already gone down, and even if we say a new blue sky is here for Valley, uh, still, that's pretty much now as good of an opportunity as here when everybody wanted to buy. But now some people think, the case is over because theoretical blue sky at Valley got lowered. But with price lowering, we're after the price to value gap, obviously, or risk adjusted, price to risk adjusted value gap. So again, it's like, just note the complete change in sentiment, with blue sky getting affected, but nobody, or not too many, seems to care about the new price in relation to the new, let's say, blue sky case. I for one, again, it's like, I don't know. I think the Snowline story got a bit, harder, let's say, given the remoteness of the project. I mean, obviously you would want to really have like 20 million, something that's like a flagship for any major gold miner, a 20 million ounce deposit or something like that. That's going to obviously be more, the sunk costs are going to be more worth it if you can mine it for, at a obscene scale for like 20 years or more. So that's what makes this a bit more tricky, because it's not just an ounce per ounce basis, but it's like, okay, we need a critical threshold for development as well. So I would much rather have, I mean, let's say 10 million ounces going from 10 to 20 million ounces is worth more, I think, than going from 10 to 20 is worth more than going from 20 to 30, because it's like at 20 there's all, it's probably going to be warranted a development anyway, especially if they have grades like they have now. So it's a bit more tricky right now, I would say, but I still very much like it, especially since this is still quite early stage, and this could grow, and there might be, who knows, areas at depth. Maybe there's a higher grade here at depth or whatever, and it goes out to the northwest, or maybe again they find something at Gracie, or this high grade core continues, a kilometer down, stuff like that. So there's still a lot of possibilities how this might go. I would just say that in my opinion, I don't see 365 million as overvalued relative to all we know about Snowline, and what I think will have happened over the next 1 to 2 years. Uh, but I think it's gonna a bit trickier, uh, given again that we really need size for, given the location. Uh, Consider me biased. I own shares of Snowline Gold, and it's in my family's hodl portfolios as well. Hope you got something out of this, and let's just keep on getting better. And I hope you got something out of this, and some, again, points making some sense, I hope. And yeah, have a great day, and soon we'll have a new year. Consider me biased. Bye.